Hey, oh my goodness. Hello, everyone. It's Naomi Wolf, and I am so happy to have our sponsor as well as an amazing commentator on the economy and investment, Shannon Davis. Welcome, Mr. Davis. Welcome back.
Yes, exactly. Glad to be back. Good to see you. Missed you.
Thank you. We're so happy to have you back. Shannon Davis is the CEO of American Alternative Assets, where he helps everyday investors protect their wealth through tangible, inflation resistant assets. A lifelong advocate of alternative investing, his passion for precious metals began at age 9 when his grandfather gave him a silver Morgan coin, a moment that sparked a fascination with hard money and monetary history. And we've had such interesting conversations about the history of money, which honestly, I've never met anyone who knows it as well as you do. Before founding one of America's leading gold IRA firms, Davis built a successful career in venture capital where he evaluated high growth opportunities and guided capital deployment for long-term value. Today, he blends that financial insight with his conviction in gold and silver as stores of lasting purchasing power, providing investors with trusted strategies to hedge against economic uncertainty and currency risk. He continues to write and speak on the advantages of alternative assets, educating Americans on how to safeguard their retirement savings outside the traditional financial system. Wow. Since you and I last talked, I
Yes.
thought I thought in our last conversation it couldn't have been a more kind of timely discussion about, you know, heavy metals or precious metals, I should
Yeah.
say. But things have, if anything, gotten more newsworthy in terms of the space you're in. So let me start with a
Yeah.
question,
Yeah.
if I may. We've just seen another rate cut after one of the fastest hiking cycles in modern history.
Yep.
Most people think this is good news, but based on your experience exposing narrative manipulation in the medical space, what do you
Yeah.
think these moves are really signaling? So I know you'll unpack that.
Yeah, definitely. Yeah, as you just said, a lot has happened. Not only this, what we'll discuss, but many other things that have the uncertainty on the highest level I've ever seen. But rate cuts in particular, rate cuts are often framed as good news, right?
Mhm.
Narratives move markets, no matter
Oh,
which one it is. It's insane.
right.
But historically, they're more often a response to stress, right? A lot of stress going on in our credit markets,
Mhm.
our subprime auto loan markets, our real estate market. So when policies reverse this quick, it's usually because pressure is building somewhere within our system.
Hmm.
So rate cuts don't signal confidence; they signal concern.
Oh,
And
wow.
yeah, typically our Fed is always a little too late.
Could you say more about that? Like, why do you say that our system is under stress and that the Fed's cutting mortgage rates, right? Or when you say rate
Well,
cuts, could you like start with what does that mean exactly? And
yeah.
why is it usually seen as good news, but you think this is in fact a result of stress? What is the stress?
Well, the stress is $38 trillion of debt. It's unsustainable. It's banks tightening up their guidelines because our economy has forgotten how to grow since COVID. There's been a hiring freeze consistently since COVID. So not a lot of money's circulating through our big machine here. And
Mm,
so the stress of the recession we're in,
mm,
whether you believe it or not,
mm,
statistically we're in it. And
mm,
so when you have that much debt that has compiled from printing money
mm,
over fist, you're going to start to see a system break. And
mm,
uh, our Federal Reserve has always done two things: quantitative easing and quantitative tightening.
mm,
If inflation is out of control, they'll tighten it, right? They'll
mm,
start raising rates. If things start to slow to a screeching halt within our economy, they'll lower rates.
mm,
But that doesn't fix anything. So that's what we're seeing right now. They've just lowered rates for the third consecutive time. and they're only doing it by a quarter basis points, which really does nothing, right? It changes our 10-year yield bond, right? If you're not paying attention to the yield curve, you should Google it and educate yourself on throughout history how you can track how recessions begin and end with yield curves, all triggered from our bond market, 30-year bond. I think we might have talked about the sulfur rate, which everything's attached to. It changes that rate. Although Fed rate is lowering, bank rates, credit swap rates, those aren't changing much. And so it's very manipulated, our interests, our Federal Reserve interests. So there's a lot of stress everywhere. I mean, I'm sure you see it, and everybody watching and listening sees it in their hometown.
Yeah. Thanks for that explanation. And what does it mean that you're familiar with narrative manipulation in the medical space?
Well, that was more, I think, what you've been able to uncover and how it coincides with the narratives in our financial space.
Gotcha. I get it. Okay, so you're making the point that our economy is weak, not strong, and my notes say that big companies are failing and banks are shaky, and that this is a warning sign, not a victory lap. That's what you've just been describing, that things are shakier than they appear? Is this your point?
Yeah, definitely. And it's not, I want to make something very clear. It's not, this is obviously our assessment as well, but you look at some of the biggest names in the financial world, like Ray Dalio or Jamie Dimon, JP Morgan Chase, where he talks about all the cockroaches within our financial system. He's talking about the manipulation, the carelessness of regulations with banks and what they can put money into in regards to people's retirement. Warren Buffett moving $300 and something billion into short-term T-bills and cash positions. Like, it's not just us, it's the smartest people in the world. They see the smart money's moving their money into a safe place. And if the smart money's doing it, we feel you should do it as well. And that's what we help people do, is follow what smart people are doing. And not saying you and I aren't smart, but the Warren Buffetts of the world, they're in that space. They know what's coming. And so when they start moving out of markets, you might want to pay attention to that.
So how do we know that Warren Buffett did that? Is that a public move that he took money out of the stock market and put it into treasury bills?
Yeah, he speaks on it himself. He's got something that's called the Warren Buffett indicator.
Oh, wow.
I think we talked about that last time. Hopefully somebody actually looked that up. He's been spot on every time. He's got the market overvalued at 76% now, unless that's grown, meaning when it corrects, it's going to go down by 76%. And he called it in 2008 and 2009. He moved his money out, waited for the correction, went in and bought everything on sale. So
wow. And is his analysis of what's shaky the same as yours, the debt and the kind of artificial bolstering, you talked last time we spoke about also personal debt. People don't have money to buy things, and you also scared me to death last time we talked, because you did, in a good way, like, better to be scared now than regretful later.
Right? Wake up call.
Right, exactly. But you pointed out that, like 25% to a third of the stock market is kind of possibly imaginary, like invested in AI. And, all these tech companies are moving into AI, which is a completely unproven commodity, basically. So your analysis overlaps with Buffett's, or you are persuaded by Buffett's analysis? Is that the bottom line?
Yeah, it's not that ours overlap. I mean, he's on a whole nother level. So he's a brilliant man, and so is his business partner. We follow him as well as other very smart individuals, and we've got a very robust research department of our own.
Hmm.
right? We've got some senior directors that work with us that have been in the commodity space since 1983,
Wow.
84.
Wow.
I think one of our oldest senior directors is 76 years old. So I think with that being said, there's a lot of experience with him alone and
Hmm.
knowledge, just like a Warren Buffett.
Hmm.
But you don't have to follow Warren Buffett. I mean, it's even on our own Federal Reserve website. I mean, they're
Right.
giving us the real numbers, and they don't look good,
Right.
or else Powell wouldn't be lowering rates.
Can I just say for people who are listening, I mean, this
Yeah.
is one reason I appreciate American Alternative Assets. I have, been in communication with various other gold companies in the past, and I didn't get the sense of deep research or even following, that they were following people who themselves did deep research, had a good track record, and so on. Honestly, American Alternative Assets is the first gold company with which I'm familiar, so honored to work with you, where you actually have a research team, and that you're diving into the economy and you have people working with you who have been, in market spaces and understand at a very deep level, what the economy is doing. I just want to appreciate that
Yeah,
because
thank you. Yeah, I
it
mean,
it's
really
not every
common.
sorry.
Yeah, I agree. It's really just common sense, paying attention to history, and we all have that knowledge. Is we've been around the block once or twice.
Right.
Yeah.
So what does inflation look like right now for real people,
Mm.
like, Main Street as opposed to Wall Street, and how is it being misrepresented?
Yeah, prices are still higher than they were just a few years ago.
Wow.
We talked about that, right? Go to the
Yeah.
grocery store, go to the gas pump. When everyday costs stay high, uh, resurgence doesn't restore purchasing power,
Hmm.
right? Our purchasing power is when you continue to print and dilute the currency, that's where your purchasing power goes away, and there's no getting that back.
Right. Right.
So, families don't experience inflation in percentages truly, right? They
Uh-huh.
they experience it in a checkout line, like we're talking,
Mm.
right? When you have to pay $800 for a Volkswagen SUV lease a
Mm.
month, that's where you're seeing inflation. And
Wow.
correct me if I'm wrong. I don't see that changing anytime
S-
soon.
So if I'm understanding you correctly, it could be that the Fed said, okay, we're going to lower, you know, the cost of borrowing money by some fractional amount. So it will look like you can get a cheaper mortgage or refinance advantageously, but those savings are probably more than offset or burned up by the fact that it costs you $400 to buy a week and a half of groceries.
Right? Yeah, exactly.
Is that the bottom line? That
That's
as
the
long
bottom
as,
line.
okay.
So your mortgage payment, if you're, depending on where you're at, right? If
Hmm.
you've got a $400,000 mortgage and
Hmm.
you're paying $2,200 a month, and it lowers by one quarter basis points.
Hmm.
So what, you go and refi that house,
Hmm.
potentially take some money out, pay off debt, maybe go buy something new, maybe stimulate the economy. But then you have closing costs. You have more. You've taken some money out of the equity.
Mm.
Now your mortgage is more, even though it's a half up. It's a 2.5 basis points lower. Are you really saving money monthly? And at the end of the day, your purchasing power hasn't changed. It's only decreased.
Yikes. And we're looking back. I'm actually reading a biography of Christopher Isherwood right now,
Oh,
and he became famous for narrating that time in the 1930s, when the Nazis were coming to power. And I'm
yeah,
not making like political analogies here, but
right.
part of what led to the vulnerability of that whole population to whatever craziness was unfolding, instability, loss of title, etc.,
Yeah.
was inflation, and that no one, and actually Christopher Isherwood talks about this, like people are living multiple people in one two-bedroom apartment, because they can't afford to have their own apartments. There it's impossible to buy goods. Goods are far out of reach for most people.
Doesn't that sound like today?
Right. Yes, it does. Yes, it does. And
Yep.
and yeah, it does. And that people are kind of transacting without any. Yeah, what reminds me of today is he describes people having no confidence in the currency. So they're at the point where they're like bartering cigarettes or bartering food or doing favors for each other because they don't have confidence in the currency, and they're not putting their money, like literally they're putting their assets under their mattresses or in jewelry, right? Or in art, because they don't have confidence in the currency, as they shouldn't. And so I definitely see that. And this leads to another very timely question, something you and I have spoken about in each of our interviews, but it keeps moving along.
Yeah.
You've warned about systemic control in the digital and financial realms, and how those kind of merge. So we're watching the financial elite consolidate assets. Where does that leave the average retirement saver? But also, since we last talked, what's the momentum of the central bank digital currency, the digitization of money, and the risk that we could all be switched off of our money if the state doesn't like our opinions? Has that moved forward at all since we last spoke?
Yeah, I think it will always continue to move forward. There's a greater plan in play here with
Mhm.
Donald Trump and his administration. Has there been a lot of it in the mainstream? No, I think you'll hear a lot more about it
Mm.
come 2026.
Mm.
But what is a telling sign is the amount of physical gold and silver that has been bought since you and I last spoke. I mean,
Mm. Talk about that, please.
metric tons. I mean, silver has literally, I think it's been about 30 days, give or take, since we've last
Yeah.
spoken.
Mhm.
And silver is up, I want to say, about 15 to 20% in just the last 30 days.
Whoa. Oh my gosh.
Massive amount of silver being bought. It's always been somewhat manipulated by JP Morgan Chase.
Mm.
Their hedge funds, they do buy physical gold and silver. That they're a central bank. They're our own IMF.
Mm.
They've got probably 3,000 tons, metric
Mm.
tons of gold and silver. Like, banks are buying more and more gold. Central banks hold more gold than they do treasuries now. And that alludes to the confidence that no one has anymore in our currency. And you can see it all over the world, where countries are no longer using our currency to
Mhm.
make trades, like China, Russia, Saudi Arabia, Turkey, Poland, you name it. And so, are we still the powerhouse when it comes to it?
Mm.
Yeah, but that will change someday. You asked the question, how secure is the average retirement portfolio today?
Mm.
But I can only tell you how I personally feel, and I would be scared that you're going to see a massive correction. And if you're only in a 401k or an IRA, you will see some losses. And if you're 72 years old, you're not young enough anymore to recoup your losses.
Mhm.
And that's a fact. Last time we saw a big correction, and we've seen many in between, just not as big. It was in
Mm.
2008.
Mhm.
So we're going to see something very similar to that. The writing's on the wall. I mean, you can't have $38 trillion in debt, stuffing the majority of that into stimulus packages and funding wars in other countries. That doesn't work when you're not putting it back into your country,
Mm.
where you can actually manufacture things and have goods and services being moved out of the country and generate some revenue as a country. Right. We have a deficit of $2 trillion. That's a lot of money. So most retirement savers believe they're diversified. No, not if you're in dollar bills and in the market. And that's why, hopefully some people, are waking up today, listening to us, and
Mhm.
really educate themselves on how they can move a portion of their wealth into gold and silver and protect it. It's theirs.
Wow. So if I have a retirement account and it's in mutual funds, or it's in like a dozen. I think I'm diversified because I'm in
Right.
energy and I'm in
Stocks, bonds.
infrastructure and I'm in
Yeah.
stocks and I'm in bonds.
Yeah.
You're saying as long as those are in dollars, I'm still vulnerable to a massive correction. Is that what you're saying?
100%. So your mutual fund may not lose as much as your higher aggressive stock position in tech, right?
Right,
Or
right,
Oracle, IBM.
right,
Oracle is seeing some massive losses, which is one of the biggest AI companies out there, right? So say you've got, you're in a moderate to aggressive position versus low risk position. So you may lose, a little less in your low risk position in a mutual fund. You lose more in NVIDIA, right?
right,
Because
right.
and so, yeah, there might be a mixture of losses, but you're still all in paper assets attached
Wow.
to a dollar bill. So when there's corrections, even by 20%, everything you have is losing 20%. But if you have money in gold and silver or platinum, it's inverse to that uncertainty and that correction. It goes up. So although you're losing, you're still gaining, and that's
Right.
what a hedge is. I think we've talked about a hedge as
We
well.
have talked about a hedge. Yeah.
Powerful. It's the old saying, like hedge your bets, right?
Right,
Yeah,
right. That's
that's
where it
where that
comes
comes
from.
from. Yeah,
Wow. And so last time we spoke, you said China's buying gold. They,
they
and
own
central
more
banks
gold
are
than
buying gold.
anybody. Yeah, you better buy some gold and silver before they buy it all. They own more than anybody. They have bought more than anybody in the last 3 years, and they continue to buy more.
And so what I'm hearing too is that gold isn't subject, kind of by definition, to the kind of narrative manipulation or corrections due to other political events that,
Yeah,
we can't control the way that the stock market is,
yeah,
right?
because there's something called counterparty risk, meaning if you're in a bank, right, and you put your money in a bank, they take that money and then they loan it out to a construction company at 13%. That construction company goes out of business, they can't pay that loan back. Poof. That's what your money's attached to. There's some counterparty risk. Gold and silver, it's attached to nothing. You,
Wow.
you can't convert it into a digital currency. It's a
Mhm.
hard physical tangible asset that is yours. It's
Mhm.
no one else's.
Mhm.
So it's not you're in control,
Right.
and we are in control of very little today. So this could be one of your last opportunities to actually control something within your financial possession.
So it behaves the way all money used to behave before money became converted into like paper dollars, notes, and now digital imaginary pixels, right? In other
Right.
words,
I mean,
no,
that's what it is now. When you sign
right?
into your online account, I mean, that you see 10,000 or 5,500, whatever the number is, right? You see it there
Yeah.
on your screen.
Yep.
Oh, well, okay. It's not like you have cash. You can just click a button and then there's cash in your hand.
Mm-hmm.
But if you
Right.
own, but if you own gold and silver, you can walk to your safe if you store it at home and open it up and grab a coin, and it's legal tenure.
Mhm.
You can barter it, and again, it's been real money for a very, very long time. And yeah,
Right. Um, wow. So one could, I mean, what I love about talking to you is not just getting the important news and the economic and financial news I need to make good decisions for my family and my
right.
future, but I also love that you get to the theory of money, which is so fascinating because it's so kind of philosophical, right? So basically, from what you're describing, when money was represented or conveyed by precious metals like pennies, dollars,
Yeah, that silver
gold
Morgan dollar,
coins.
the story you tell, right? Years and years ago, people walked around with that in their pocket and
Right.
bought things with it.
Right. But then a whole kind of meta universe arose with paper notes and banknotes, they used to be called, right? And now
Yeah,
digital currency, which is kind of not really money, right? It's kind of a representation of money, but it isn't actually money anymore, right?
yeah, it's a what they call a fiat currency, right?
How
It's
is that what that means?
yeah, fiat currency is uh, our currency. That's what that is. The dollar bill is called a fiat currency, which is backed by nothing but the
Because they took it off the gold standard.
Correct. Yeah. And that's when they had to create fiat currency. Our money changed when they took it off the gold standard. We went from Bretton Woods monetary system to a fiat currency system.
Wow.
And fiat currency is just the definition is the confidence that you have in the country that's backing the currency, which is the United States of America, which I'm proud to be an American, obviously, but at the same time,
it's a lot of trust.
Right? Yes, and I don't, look, call me paranoid, but I don't trust everything that they do. Now, is everybody doing the wrong thing? No, of course not.
Right.
But I don't trust them.
So, but it's not transparent. I mean, by definition, you can love your country and even have confidence in the people running the economy, which is rare, right? But
right.
Say there's a change of government, say there's an impeachment, say there's there are things happening behind the scenes with the economy that we can't ever possibly know unless we're in the room with the people, having the discussion. Let's have a, let's we're not in the rooms with the Fed, right? If we were, we could bet on what happens if they lower the rates and make money cheaper to borrow. But we're not in those rooms, but a handful of people are in those rooms. I mean, you just think about the fact that, our elected officials go into Congress worth maybe $200,000 or $300,000 and come out worth 25 million, like AOC. I don't think she's a financial genius. I think they just seriously, they just have advanced knowledge of what kind of manipulation is coming down the pike, and so that is enough to want to invest in forms of value that are not manipulable, right? That
think about Nancy Pelosi, right? Everybody knows Nancy. Mm-hmm. She is the best investor. Like that's how she's made her wealth, is investing into the stock market. Right. And she's a smart lady. I'm not discounting that. Mm-hmm. But to be statistically one of the best investors in history,
right?
She obviously knows there's some inside trading going on,
clearly,
which is against the law. But look, more power to her. Right. If I had,
I'm not with you there, because when I was married to a White House speechwriter, we had to, which was as it should have been. We had to put our assets into a blind trust, so that, because otherwise it would be so easy. I'm writing a speech about Apple. Let's invest in shares in Apple. It's not even illegal, right? You just know what the speech is going to be. I guess arguably it's illegal, but it wasn't allowed then. Clearly something has changed in the last couple of decades, because clearly they're all betting on what they know is going to be happening. But all that being said, investing in gold and silver isn't just immune from those kinds of shenanigans. It's also kind of a radically egalitarian way to invest, because when I buy an ounce of gold, I have exactly the same advantages and disadvantages as everyone else, up and down the economic ladder of every race and class and ethnicity and religion who's buying an ounce of gold or silver. Do you see what I mean?
I do. Oh yeah, I couldn't agree with you more. You nailed it. It's beautiful.
That's really interesting. So you are talking about the fact that most retirement accounts are stuck in the stock market. You've talked about why they, in your view, are going to face a correction. Do you have a timeline for that? Like, is it going to be during the Trump administration? Is it next year? When should people be anticipating that?
That would be amazing. Yeah, that would, if I had the crystal ball for that, it would be amazing. You just have to pay attention to it. I mean, if you look at the market this last week alone, I want to say Monday I might have it backwards, but Monday it was down, Tuesday it was up, Monday it was down, Thursday it's up. Like that, literally down, up, down, up. So that tells you there's some liquidations happening. There's some sell-offs happening. There could be some profits being taken by big hedge funds.
Oh, wow.
I'm not a financial advisor. We don't advise anybody. We just educate ourselves, really. So we can make a proper, an educated decision. That's what we focus on with our customers, is just education, and then make an educated decision from there. Right. Yeah, I mean, I think the market, if you just pay attention to it, it's starting to show some signs of correcting. If you just look at history, but
Right.
no, definitely don't have a crystal ball when that's going to happen. That's why it's so important to just prepare
Right. Totally.
and because you
You don't
don't
know. You don't
because
know.
when it happens,
Hmm.
you don't know it's
Right.
happening
And
until
you
it.
don't want to be the one stressing out, checking your
Yeah.
stocks every minute or checking your IRA as things
Imagine
collapse.
imagine rolling over on a Tuesday morning and looking at your wife going, "We lost 33% of our retirement savings
Oh
last
my gosh, I can't
night."
imagine. I mean, I
Happens
have to
all the time.
say that is one thing that I really want to thank you for since Brian opened our gold account. I
Mhm.
know, even though, we don't have everything in it that I want over time, I know it's there. I know I can keep adding to it. And it
Yeah,
does give you peace of mind.
it does.
I read these horrible headlines and I'm like, that's bad, but we're in real estates and gold and minimal treasury bills, and so
Nice.
yeah, well, I mean, I'm paranoid. I thought I was going to be debanked. I think I shared this with you. No,
Yeah.
seriously, I
You
thought
thought
I
you were
was going to
moving
be
out of New York,
debanked.
right? Yeah.
Well, and now, I mean, well, I don't want to get, well,
Yeah.
I guess we should get into local politics. Mamdani is taking over New York,
Okay.
and I fear that things are going to be even more volatile economically because New York is the center of the financial world. It has been. People are fleeing New York. Perhaps he's an actual communist. For all these reasons, um, I think that there could be volatility ahead that we can't even imagine when it comes to
Mm.
financial markets. Um,
Yeah.
just the instability of it all, right? We've never had a communist in charge of America's financial center, because he's talking about doing things like taking
Scary.
possession of landlords' apartment buildings. Just the city will grab it. Like that's
Yep.
never happened in the American economy before. I guess there's eminent domain, but it's very narrowly,
Right.
defined that the state
Yeah.
can take your stuff. And now we've got a situation that's unprecedented. The state can take your stuff. That's the kind of political, um, un like unpredictable impact on markets that there it's not going to affect gold and silver except to make it more valuable as people go
Yeah.
I'm going to pull out of real estate, maybe put it in gold and silver, pull out of the stock market because this guy's crazy. Sorry, that
Well,
so
you're
go
spot on. Well, when there's uncertain rules are changing, by the way, rules are changing, and we don't make the rules, so we have no say in them. Right. That's why
right.
currency can change like that. I mean, what you're talking about is just another Lego piece to how much uncertainty there is out there.
Right. Right. And
And
lack of transparency, right? I
when
mean,
it's like that, gold and
mhm.
silver are where you want to be. Let me know of a better place, and I'll put my money there too.
Totally. And real estate in New York City, which I used to be bullish on, I can't wait to get out of it. I mean, but timing is everything, right? Me and everyone else. I
Yeah,
mean,
yeah,
so, uh, but gold is above and beyond all of those arguments. Um, Julia Collins 777 asks a really good question. Another horrible jobs report was released Tuesday.
yeah,
This is her emoji. The
yeah, yeah,
unemployment rate went up again for the fifth month in a row, and she cites it. This is a really good comment: 4.1%, 4.2%, 4.3, 4.4, 4.5, 4.6. What
yeah.
impact, if any, does the unemployment rate or the jobs report have on the kinds of pressures that you're describing?
Oh, it's the number one thing. This is the biggest problem. Our labor market is the number one thing. Yeah,
What do
it's
you
the
mean?
highest. It's the highest it's been in 4 years
Mhm.
because this is what generates a strong economy.
Mhm.
Is when people are working and spending money, and then you have what's called velocity of money. So it's like, okay, I make $1 and then I go to a restaurant, I tip her $1, and then she
Mhm.
goes to the liquor
Right,
store and then she buys her, whatever she's buying at the liquor store. And then
right.
the liquor store guy takes that money, and that's called the velocity of money, right? When no one's working, or
Mhm.
no one's talking about the thousands and thousands of jobs that are being lost every single month right now.
Mhm.
in a labor market that hasn't been hiring since COVID. Like
Right.
it's so there you haven't seen a lot of layoffs is because there hasn't been any hiring, so there's been little firing.
Mm.
And so now we're starting to see that these companies can no longer afford to pay their payroll taxes, to pay 10 employees. They can only afford to pay five
Mm-hmm.
because they're not generating any revenues, any real profits. And this
Mm-hmm.
is why, I don't know about you, but I drive around my little city, Simi Valley, California, and there's empty businesses everywhere for
Yeah,
lease.
no, it's terrible. It's absolutely terrible. We helped a candidate run for Brooklyn City Council in a pretty low income working class part of the city. And these are really hardworking people. It's not no extreme, right? Not people who are living solely off of benefits, not people who are, wealthy enough to not work. It's working people, it's middle class people and working class people. And Main Street, she did a video walking down her Main Street, store after store after store after store was
Wow.
closed down. And she connected to two things: the sluggish economy, but also crime and the
Yeah.
breakdown of law and order. And I can see how these things go side by side, but also,
Yeah.
Amazon is killing, small businesses, but also
Laying
as
people off.
laying people off. Exactly. Um, I think that your point is very well taken. When the jobs dry up, I mean, it's a vicious circle, right? The jobs dry up, so people don't have money to spend. So other jobs and stores close, so people don't have money to spend. Those people are not employed, and so on. What role does closing? I mean, I'm not trying to approach this politically, but just
Yeah.
practically, a lot of people were here working who were illegal immigrants,
Uh,
and Trump has, sent them back or encouraged them to self-deport. Is that going to boost the economy in the long term, or is it not having a positive effect yet or ever?
yeah. I mean, completely biased with any political stance on it. You're getting rid of people that do the jobs a lot of us don't want to do, and that's a fact.
Hmm.
That does generate money pushing through our economy, whether if they're legal or not.
Hmm.
I that's a whole nother can of worms we can dive into. But when it comes to what we were originally talking about, I mean, when there is no money being made
Hmm.
by individuals and
Hmm.
and incomes aren't even keeping up with the cost
Right,
of goods and services,
right,
that's when people start using credit cards.
right,
Now
right.
our we have the highest amount of debt that's been racked up on credit cards for personal
Mm.
and also businesses. And then you got now a bubble. That's why they're calling it the everything bubble, the credit
Hmm.
bubble, the real
Hmm.
estate bubble, the
Hmm.
market bubble. I mean, it's the everything bubble. And so so to answer, that was a great question. It all
Wasn't it?
starts with the labor market and
Oh, wow.
unemployment. It all starts there.
Right, right. So basically, no matter what the president does in terms of immigration, we're not going to see the economy bounce back, to what it should be to keep our assets safe if we're invested in the dollar, is back to our main subject, right?
Right.
Okay. So what would you say to someone like Roscoe Rossi, who's one of our good friends? He says, so not my wheelhouse, this discussion. I live off the land by the day. So first I would say to you, Roscoe, good for you for
Yeah.
having, food and water and, the basics, not dependent on the stock market. But I guess what would you say more generally to people who are thinking, I live paycheck to paycheck. How can I possibly afford to participate in this discussion? How can I afford to open a gold account or a silver account with American alternative assets? What would you say to them?
Yeah, I mean, yeah, definitely, Roscoe. That's awesome. I'm envy. I kind of live off the grid to a certain extent, but not on that level, and I couldn't appreciate it more. For a gentleman like Roscoe, he's still generating dollar bills for his income.
Hmm.
Uh, Dollar bills that he does have to buy goods to be able to produce
Mm.
whatever he is producing on his land. And so, in a situation like his, if he wants to preserve his wealth, then he should put some of his dollars into gold and silver so that it preserves the wealth he's built over time. But yeah, and no, I don't think he's living paycheck to paycheck. It looks like he commented here. We're not questioning that, nor do we think that by any means. Especially with him living off the land, he's got the upper hand. But that's a very rare scenario in the big scope of our population.
Well, so let me drill down a little bit. He's noting, I guess he's using that metaphorically, and so he lives paycheck to paycheck, and a lot of people watching, what is it, like half of Americans are living paycheck to paycheck. So if someone's living paycheck to paycheck, what would you say to them? Is it, how can I put it? Could someone who has $500 in their savings account call American Alternative Assets and say, hey, it's just $500, but I want to start somewhere. Can I open a gold account?
Got it. Understood. Yeah, definitely. We deal. We have some partnerships for some smaller purchases. For us in particular, we're an institutional buyer. We deal in volume, like huge wholesale volume. So our minimum position is 50,000, but we do have some partnerships with some very reputable companies that we would point them in that direction if they're looking to buy $500. And we help people, do that every single day.
So nice of you.
With some partnerships, because $500 is better than $0 in gold and silver, if that's your budget. It's really just whatever your budget is.
And as I keep thinking, Brian and I have this conversation all the time, my husband and I, if we'd put $1,000 in gold 5 years ago, we'd have $5,000. If we put, 10,000, if we could have scraped that together 5 years ago, we would have $50,000 now. I mean, it's like,
or if it's what, like you save $300 a month times 12, that's $3,600. Imagine if you just did 300, if that was your budget.
Right.
300. Right. And then at the end of the year, you got 3,600. And if you look at an ounce of gold today, you're not doing too bad. Or even with silver, it's not a bad idea, no matter what level the budget is.
I appreciate this conversation because 50,000 is a high bar for a lot of people to get started with. But,
sure.
Many of us fritter away $300 a month. I mean, literally, if I thought about Amazon purchases, I don't need that snuggly blanket. I don't need that premium herbal tea, but at the same time, you sort of think, this is embarrassing. I only have $300 a month. I don't want to bother Shanon Davis and his colleagues. No. But if you're telling people you can start somewhere, American Alternative Assets will help you, and $300 a month is perfectly respectable as a goal, with your partners to create a gold or silver account. That really is inspiring. Like, it's so funny about money, right? You can either feel like it's hopeless, there's no point. That's how I feel about my savings account. What is the point of saving money in a bank? We haven't even talked about this. Digital contracts. My TD Bank savings account, they said, oh, you've got money sitting here. What about putting it in a savings account? And it's a variable savings account rate, so they can dial down the money I'm making by saving money, or dial it up. They're not going to dial it up. They're going to get me at 3%, and they're going to be like, oh, that's 0.001%. Sorry, but thanks for the money. And I'll never even know, because the terms and conditions I signed buried that in the fine print, right? Are you as worked up about that as I am? You can't even trust. They're not even solid contracts anymore with the people handling your money digitally.
Oh yeah, you can get me fired up on it too. Trust me. Yeah, I mean, it sounds like you're talking about like a CD or a money market account. I mean, inflation is more than 3%. So what's the purpose?
Right.
Really, and that's why, again, if it's $300, again, $50,000 is very small to some and very large to others, and it really just depends on the individual, of course. But we help a lot of Americans that have money in retirement accounts that they've worked entire lives for.
Right.
And they've now that is their livelihood, right? They work at the company for 30 years. They now have $642,000 saved up in
Mm-hmm.
their thrift savings plan, right? If they're a
Mm-hmm.
government worker, it's a TSP. That's not doing anything for them.
Right,
Those
right.
funds that it's in, and so we help them move a good portion of that into gold and silver,
So
tax
smart.
deferred
So
penalty.
smart.
Yeah.
Because between inflation and that correction, they could lose half of it, right? Or they could lose,
Oh
I
yeah.
mean, it might, that alone, it could seem like enough, or you could meet with your financial advisor, and think this year, whatever, I'm 72, say I live another 15 years, it's enough, for me to cover my expenses barely. But then there's some horrible correction or
Yeah.
inflation, and it's not enough. And then you're look at, but if you put a third of it or a half of it or whatever you advise in gold and you diversify, then you are protected from something dramatic, right?
Well, here's another way to think about it too.
Okay.
Okay? Instead of just the like this, I'm not going to say negative, but like the scared to lose side of
Yeah.
your money, right?
Yeah.
So a lot of people have done very well the last couple of years. This
Mm,
market has been absolutely pumped up. Right? It's been, and this
mm,
is why Warren Buffett says it's overvalued by 76%. They have absolutely pumped this thing up. AI, like we've
mm,
been talking about, is a big portion of that.
mhm,
Nvidia pumped the market up. It's one of the big seven holding this market up.
mm,
But so think about it in this way. So now you're 84 years old,
mhm,
just killed it for the last couple of years. You've made quite a bit of money.
mhm,
Now it's time for you to go in and cash in your winnings, right?
mm, mm,
It's like being at a casino in Las Vegas. If you keep staying at the table,
mhm.
you most likely are going to give
Oh,
back your
interesting.
winnings, right?
Yeah,
So
yeah.
why not go cash in your winnings and then put
Right.
it into a vehicle
Right.
like gold and silver that then stores your wealth and preserves your purchasing power and isn't affected by corrections or our dollar bill, right? There's so many ways you can look at it. It
Right.
doesn't have to be. It doesn't have to be the sky is
Scary
falling.
one. Yeah.
Yeah, it could be. I'm 84
Right.
years old now.
Right.
There's
Right.
no point for me to stress out about where my money is.
Mm,
Enjoy my life, the
mm,
few years we have left here, right?
right.
And
Right.
let me pass down something to my next generation that's actually worth something. And so you can look at it that way. Or you're
Wow.
say you're up 20%, but look,
Right.
the dollar's lost 10%. Inflation is, some say 15, 16%. So unless you're making those type of returns when it comes
Mm,
to how much value the dollar's lost and
mm,
what real inflation looks like, you're not really making anything. So it's not about always just losing. It's about where do you have your money positioned and are you
right.
truly diversified? Yeah.
Wow, that is an incredibly good way to look at it. It's funny, with money, we project our psychology, and
Mm-hmm.
mine is, what's the worst that could happen? It's like, ah.
I think because we've been kind of like that's been the narrative. Like when you wake up, all you see in the news is like that. Like look at these
Yeah,
shootings and shoot.
yeah.
Like, it's just like you're kind of trained that way. It's
You
totally
are. It's
natural.
true. It's true. But you're right. I mean, one should also, especially as we get older, it's reasonable to think, if you've worked hard all your life and you want to enjoy this plateau, I don't want to worry about it. I want to take that worry load off my plate, and have that peace of mind. Well, this brings us to a really important question. Again, the philosophy of money. So interesting in
Yeah.
speaking to Shannon Davis. You've written about the loss of trust in institutions. We've seen that so much in the last 5 years. How does the shift toward tangible assets like gold reflect this issue, the loss of trust in institutions?
Well, it gives you the ability to have some control for what you want, right?
Mhm.
The
Yeah.
like, institutions, we're talking about, some big, huge institutions like a Target, right? We were talking about all these businesses that went out of business, these smaller mom and
Mm,
pop shops, right?
mm.
But not Target. I mean, Target owns Kohl's. I didn't even know that till the other day.
Wow.
That
I didn't
Target,
know that either.
yeah. And Kohl's was, if you remember, it might be dating myself here, but Mervin's. Do you remember
Oh, yeah, I
Mervin's?
remember Mervin's. Sure.
Yeah, so that's what became Kohl's, but then Target bought Kohl's. It's just amazing how these big companies just monopolize, right?
Yes.
Nestle owns so much that it's not even funny. And so this is what you're trusting them,
Right.
right? And so
Well,
that's
why not? I don't understand your point there. Why shouldn't you trust people who are consolidating?
well, it's more like monopolizing. And
What I mean, why isn't that a good bet? They own the
well,
market.
because then it's like Department of Water and Power. That's the only if you're in Los Angeles County.
Oh, oh, no alternatives. So
Yeah,
they have
yeah,
no incentive to be good, is what you're saying.
yeah, they control the market.
That's what, and Roscoe Rossi adds, I like Kohl's, but Target has gone to hell. And
Nice.
that's making your point, right? Like they don't Target,
I love Kohl's
yeah,
too. Yeah, but no Target. Hell yeah,
Target doesn't have to
Target is.
compete, right?
Yeah, they can make their own markets, right? And
Right,
trust is. I mean, I think anybody when you talk about trust, it's just you have to trust yourself more than
right,
others, and I think
right,
that's where some people struggle. And that's what we talk about with our clients is just trust yourself to manage a portion of your own money by holding gold and silver in your possession.
right. Okay, so that makes sense. I mean, the institutions can collapse all around us, but when we manage our own assets with precious metals,
Yeah,
we can trust ourselves and advisors whom we trust, like yours. Um, wow. Well, what are some final? Sadly, we've run out of time. It goes so fast when I talk to you. But what are some practical things that people can do right now if they're listening to us and they think, he's kind of making sense. She's making sense. I better. I want that peace of mind of
yeah,
being
yeah.
invested in
Some
gold.
peace of mind. Yeah, that is really what it is. It's having peace of mind, and we all deserve it. But a reasonable thing or a reasonable step is, and it doesn't have to be like a drastic move. Um, Even modest diversification is a good thing. So it starts with what you're offering your viewers is our free report. Um, Go to cloutgold.com. I'm sure you'll let them know,
Mm-hmm.
and get the free guide. Start there, the free report. Uh,
Mm-hmm.
when you fill out for the free report, you can also request to schedule a call with us. So it's on your terms, not
Mm-hmm.
ours. No pressure.
Mm-hmm.
But we would definitely love to educate you on what is really going on in the gold and silver market, and see if it makes sense once you're educated to move a portion of your wealth into a safe place.
I love it. It's so good to have alternatives these days and to have real options for how to really protect ourselves. Well, Shannon Davis, it's been incredibly illuminating as always to talk to you. And I'm going to remove you from the studio so I can tell
Okay.
people more about where
Yeah.
to go, and you can listen in or not. But thank you so much. I can't wait for you to come back in a few weeks. And we're so happy to have you in American Alternative Assets as our sponsor. Again, we're really picky, so goodbye for now. And I will just read this. What do three billionaires, four major banks, and a legendary 72-year-old investor all have in common? They're all making the same shocking prediction. Gold is headed for $10,000 or more. Goldman Sachs says that gold will surge 20%. JP Morgan says 25%. And one respected economist now believes the US government could deliberately raise gold's official price to help pay off the national debt. The world's wealthiest players are already making their moves. Now you can see exactly what they're seeing. You can do it for free. Our friends at American Alternative Assets just released a powerful new report, The Surprising Case for $10,000 Gold. It breaks down the hidden signals, the central bank buying spree, and the way smart Americans are protecting their retirement with gold right now. So go to cloutgold.com to download it for free or call 855-803-GOLD. If you do call, mention us, it helps us. That's cloutgold.com or 855-803-GOLD. And don't wait. The window to act in advance, protectively, proactively, is closing fast. So happy to be able to bring you these wonderful sponsors. Again, as I often say, we are very choosy about our sponsors. We only promote products or services that we use or make use of ourselves. And Brian and I are really, really excited to have an account at American Alternative Assets. And as I said in my interview, there are a lot of gold companies, but this one really is very reputable, very respectable, glowing reviews. And they answer questions very, very transparently. And that really matters. These are important, and this is your baby, it's your savings. So that's it for me. This is Daily Clout Outspoken. Go over to Substack, my podcast, and Substack, Outspoken, and please become a paying subscriber there if you possibly can. It helps us bring independent news and also civic tools to pass good bills from your phone over on billcam.com or legisector.com. You can also donate or subscribe at dailyclout.io, and go check out billcam.com and legisector.com. Become a subscriber there. It's amazing. With legisector.com, you can actually get updates, portals of any one of 27 industry verticals for upcoming legislation. So you can also bet on the markets legally because you'll know what they'll be doing from having an inside view on the legislation. But also if you're an advocacy group, a candidate, if you just care about an issue like abortion rights on one hand or the right to life on the other, immigration, housing, if you're an accountant, tax law, it's all right there for only $11.99 a month. Our competitors charge thousands. So it's an incredible tool for transparency and insight. And I really encourage you to go to legisector.com or billcam.com, which is the sort of the, retail version of that. Love you guys, and I'll see you tomorrow. This is Naomi Wolf.